Today, we are strapping ourselves in to look at what Morgan Stanley is calling the single most powerful growth engine in the entire global tech ecosystem.
Advanced semiconductor manufacturing equipment.
Exactly. We're diving deep into ASML, the Dutch giant that has an absolute monopoly on the critical lithography tools, the EUV and DUV systems that make pretty much every advanced chip on Earth.
And the whole premise for this deep dive is, well, it's pretty clear. The AI revolution is moving beyond just software and models.
Right.
It's now demanding this huge physical investment in actual infrastructure. So we're here to synthesize a massive research report that predicts exactly where, when, and how much money is about to land.
And our source material is a real heavy hitter from Morgan Stanley MS, as we'll call them, titled ASML's Peak Moment. And the moment they're talking about is 2027. They're making an incredibly bold bet here.
A huge bet. They believe this specific year will be ASML's historical peak for earnings growth.
Yeah.
And it's all driven by this unprecedented global flood of capacity expansion.
So for you, the listener, the mission here isn't about short-term stock moves, right?
Not at all. Our focus is structural. We need to understand the underlying drivers, what they call the three massive engines, that MS believes will push ASML to this historic peak. I mean, this report is really a masterclass in connecting a macro trend like AI to the nitty-gritty capital spending plans of giants like TSMC.
Okay, let's unpack this. Morgan Stanley isn't being cautious here. They're basically screaming this prediction. So what does a peak moment actually look like in hard numbers?
The scale is, well, it's staggering. For the 2027 fiscal year, MS is projecting ASML's total sales will hit about $46.8 billion.
Wow. And just for context, that's a colossal increase over even their most optimistic historical numbers.
It is. And when you look at profitability, the jump in margins alone tells you everything about their market power. They're forecasting EBIT, that's earnings before interest and taxes, to reach $19.7 billion, with the gross margin expanding to a massive 56.2%.
That profit margin is the key, isn't it? It shows that when customers need these high-end EUV tools, they have literally zero other options.
Zero alternatives, which gives ASML pretty much non-negotiable pricing power.
But the real core of this, the number that really jumps out, is the earnings per share, or EPS. They're projecting 45.74 for 2027. Why is that number so important?
Because that EPS figure represents a just massive 57% year-over-year growth from their 2026 estimate of 29.12.
57%.
Yeah. And MS explicitly calls this the highest annual profitability growth rate in the company's entire history. So this isn't just a good year. They're saying it's a historically defining year.
And the conviction behind it, too. They didn't just maintain a high forecast. They raised their 2027 EPS estimate by 35%.
From 33.94.
Yeah.
That's a huge revision upwards.
And that 35% revision is the real signal. It shows that ASML's biggest clients, the chip makers, have now communicated concrete spending plans that are way more aggressive than anyone thought. This isn't sentiment, it's based on updated, confirmed orders. And they backed it up, of course, by raising their price target from $1,000 to $1,400,
Right.
keeping it as a top pick.
Right.
Okay, so that's the financial scaffolding. Let's get to the operational reality. Let's talk about Engine 1.
Engine 1 is the foundation of this whole thing. The relentless demand from advanced logic foundries, with TSMC really acting as the main catalyst for the entire forecast.
We've all heard about TSMC's massive spending plans, but let's get specific. What's the capital expenditure commitment that's actually underpinning this whole prediction?
So TSMC gave guidance for their 2026 CapEx, and it's between $52 and $56 billion.
Okay.
If you just take the midpoint of that, it's a 32% increase year over year from their 2025 spend. That 32% jump is a tectonic shift. It signals they're moving from just optimizing to pure aggressive build-out.
And the crucial detail is where that money is going, right? Because not all CapEx is the same.
Exactly. And they specified that a monumental 70 to 80% of this spending is for advanced process technologies. So the vast majority is going directly to buying and installing ASML's machines.
Which led MS to just dramatically revise their forecast for EUV tool sales. What are the new numbers just for TSMC?
The revisions are breathtaking. For 2026, MS raised their EUV tool expectation for TSMC from about 20 units to 29. But for 2027, the peak year, the revision is even more aggressive.
Okay.
They went from expecting 28 tools to a whopping 40 units.
40 EUV machines heading to one customer in 1 year. Wait a minute. Can ASML even physically make that many? That sounds like a major bottleneck risk.
And that is the fundamental critical question, right? The report acknowledges the bottleneck, but it notes ASML has been working aggressively with its suppliers like Zeiss for the optics to expand capacity specifically for the surge.
I see.
And remember, these are the very complex low-NA EUV tools. They take a long time to build and install. If they can deliver 40, it basically validates years of structural preparation.
And this spending isn't just for current demand, is it? The report says TSMC is already preparing for the A14 process for 2028.
Precisely. They are building capacity ahead of the curve. They're anticipating that the demand for sub-2 nanometer chips is just going to explode.
Right.
And while TSMC is the anchor, MS also sees momentum from Intel and Samsung as they both try to catch up.
What are the expectations for them in 2027?
MS expects both Intel and Samsung to buy 5 to 6 EUV tools each in 2027, just for their foundry and logic businesses.
So you add that up, 40 for TSMC plus, say, another 11 or so for the other two.
You land at approximately 52 units, total EUV tools just for the logic and foundry sector in 2027.
52.
Yeah.
And that is more than double their previous estimate of 25 to 30. That's engine 1 at max throttle.
Which brings us directly to engine 2. The DRAM memory capacity expansion. Because, all these advanced logic chips are useless if they can't get data fast enough.
And this is where the memory panic comes in. What's the AI catalyst here?
It's what MS specifically calls agent AI. They're talking about the next phase, highly complex language models and autonomous agents that need massive amounts of super fast local memory.
And how is that affecting prices right now?
Well, DRAM prices showed extremely strong momentum in the last couple of quarters. The big cloud providers are anticipating their 2026-2027 needs for agent AI, and they're buying ahead. So you have capacity scarcity leading to just unprecedented price growth, especially for high bandwidth memory or HBM.
You hear HBM everywhere now. For anyone listening, can you just break that down? What is it and why is it so essential for this agent AI idea?
Sure. HBM is basically memory modules that are stacked vertically right next to the processor, right on the same package as the GPU. Its value is the bandwidth. It's like a super fast local cache.
Okay.
It can feed the processor data at incredible speeds, which is non-negotiable for the kind of parallel processing these huge AI models demand. And the scarcity of HBM is what's forcing this frantic expansion.
So rising prices force manufacturers to build new factories. How does that translate to ASML?
It translates into massive new DRAM factory construction, and MS expects that investment, the actual building and tool installation, to land primarily in 2026 and 2027, all to prepare for demand in 2027 and 2028.
Now, memory needs a different kind of tool too, right? DUV, not just EUV. We focused on EUV for logic, but what's DUV's role here?
Right. DUV is the older, less precise lithography, but it's still absolutely essential for high-volume, cost-effective memory production. It handles the less critical layers of the chip. And MS projects ASML's 2027 DUV sales, based mostly on this DRAM wave, to hit about $15 billion.
$15 billion. Just from the older tech. That's extraordinary. And they mentioned a potential upside from NAND, too.
They do. They note that the $15 billion is mainly from DRAM. If NAND flash storage construction grows more than they expect, that number could climb even higher.
Okay, so we have the two main engines, the 52 logic EUV units and the massive DRAM expansion. Let's put it all together for the overall forecast.
When you combine the logic demand of 52 EUV tools with the memory needs, MS projects total EUV shipments for 2027 will hit a record high of 80 units. Yep. So that's 52 for the logic giants and the remaining 28 going to memory makers like Samsung and SK Hynix. That 80-unit figure is the core physical metric behind the whole 2027 peak forecast.
We mentioned three engines, though. We've covered logic and memory. What's the third engine that gives this forecast its near-term stability?
The third engine is simpler. Demand right now is just proving stronger than anyone feared. This completely changes the outlook for 2026. ASML had been pretty conservative, guiding for a potential 15 to 20% decrease in sales for 2026.
A digestion year, basically. And what does MS say now?
Their research shows that demand for memory makers and others is just persistently strong, so they've shifted the 2026 forecast dramatically. MS now expects 2026 sales to be roughly flat year over year.
And flat, in what was supposed to be a down year, is a massive win.
It's a huge win. It signals stability right before the 2027 boom.
Which brings us to an immediate catalyst. ASML's upcoming Q4 earnings report on January 28th, 2026. What should our listeners be looking for in that report?
Two things: the order book and the forward guidance. MS expects Q4 orders to be very strong, around 7.27 billion. That's way up from Q3. And that book includes 19 low-NA EUV tools, with 9 confirmed just from TSMC.
And there's a crucial detail here. This Q4 report is the last time ASML is going to publicly disclose its detailed order data, isn't it?
That's right. So this final order book is going to be under a microscope. Everyone will be scrutinizing it for clues.
Absolutely. What about sales?
For sales, MS expects them to hit the high end of the guidance range, about 9.675 billion. But the most critical piece will be management's tone on their 2026 guidance.
And what should we expect there? To set the stage for the 2027 peak.
MS thinks ASML will guide toward double-digit sales growth for 2026, maybe around 12%, putting sales at 36.5 billion. Even if management uses conservative language, the analysts expect a much less cautious tone, basically confirming this upward trajectory into 2027.
So let's synthesize this. We have a financial projection that defines a historic growth cycle, and it's driven by a synchronized global commitment from the biggest players in logic and memory.
The core insight is that the world's biggest chip players, TSMC, Intel, Samsung, are all placing their massive capital bets on the exact same year, 2027. It's creating this gravitational pull for ASML. It's like a synchronized global factory build-out.
And it's all fueled by the hardware foundation needed for the AI revolution. So for you, the listener, what this really means is this isn't just about a stock price. It's a clear window into how the AI hype translates into trillions of dollars of specific physical investment on the ground.
Exactly. When people talk about AI needing compute, this is the concrete infrastructure being ordered today for deployment in 2027.
And that build-out has a ceiling that Morgan Stanley has already thought about. Their really aggressive bull case sees the stock hitting €2,000.
Right, based on an even higher 50 UPS. That level of conviction suggests they see a very long, very intense ramp up here.
Which raises the final, I think, provocative thought for you to consider. We've laid out all the structural drivers for this massive build-out, the orders from TSMC, the need for agent AI memory. But what could actually stop it? I mean, what kind of event or confluence of events in the geopolitical or macroeconomic environment would have to happen to prevent this massive capacity expansion from actually happening in 2027?
That is the real question that determines if this cycle truly peaks as predicted.
Indeed. Something to mull over as you track those order books over the next couple of years. Thank you for joining the Deep Dive.